What happens during the mortgage closing process? Hello everyone, and welcome back. Today I want to speak directly to first-time homebuyers because one of the most exciting and sometimes most confusing parts of buying a home is the closing process. You found the home, your offer was accepted, you completed your loan application, you sent in your documents, the appraisal, title work, underwriting, insurance, and final conditions are being reviewed. And now, you are getting close to the finish line. But before you receive the keys, there is one document that deserves your full attention: the closing disclosure, also known as the CD. Now, earlier in the process, your lender gave you something called the loan estimate, or LE. The loan estimate is given near the beginning of the mortgage process, usually within 3 business days after you apply for the loan. It gives you an estimate of your loan terms, interest rate, projected payment, closing costs, and cash needed to close. The closing disclosure comes near the end of the process, and by law, you must receive it at least 3 business days before closing so you have time to review it carefully. The easiest way to understand the difference is this. The loan estimate is the lender saying, based on what we know right now, this is what your loan should look like. The closing disclosure is the lender saying, this is what your final loan terms and closing numbers look like before you sign. So the LE is the estimate. The CD is the final review before closing. And this is where first-time buyers need to slow down. Do not just look at the monthly payment and move on. Do not just ask, where do I sign? This document tells you what you are borrowing, what you are paying, what your interest rate is, how much money you need to bring, and whether the numbers match what you were promised. Let's go through the most important parts. Page 1. Loan terms, payment, cash to close, and personal information. Page 1 of the closing disclosure is one of the most important pages. First, look at your personal information and property information. Make sure your name is spelled correctly. Make sure the property address is completely accurate. Make sure the loan is tied to the correct home. This sounds simple, but mistakes happen. A misspelled name or wrong address can delay closing. Next, look at the loan terms. You want to confirm the loan amount, the interest rate, the loan type, and the loan term. Is this the loan amount you expected? Is this a fixed rate loan or an adjustable rate mortgage? Is the term 30 years, 20 years, 15 years, or whatever you agreed to? Does the interest rate match what you locked? Even a small change in the interest rate matters. A fraction of a percent may not sound like much, but over 30 years, it can affect the total amount of interest you pay. Then review your projected payments. This section breaks down your estimated monthly payment. It usually includes principal and interest, mortgage insurance if applicable, and escrow items like property taxes and homeowners insurance. This is where you need to ask yourself, does this monthly payment match my budget? Are the taxes reasonable for this property? Does the homeowner's insurance match the quote I received? Is mortgage insurance included if I expected it to be included? First-time buyers often focus only on principal and interest, but escrow can make a big difference. Property taxes and homeowner's insurance can increase over time. If the escrow estimate is too low, you could face a shortage later. Now look at cash to close. This is the number that tells you how much money you need to bring to the closing table. Your cash to close appears on page 1 and is detailed again on page 3. This is not a number to guess. This is the number you must verify. You need to know exactly how much money is required and how it must be delivered. Some closings require a cashier's check. Others require a wire transfer. If a wire is required, be extremely careful. Always verify wire instructions directly with the title company, attorney, or closing agent using a trusted phone number. Never rely only on last-minute email instructions because wire fraud is real. Page 2. Closing costs and line item fees. Page 2 is where you compare the details. This is the page where you look at the fees line by line and compare them against your original loan estimate. Look at lender fees. Look at discount points, if any. Look at appraisal fees, look at credit report fees, look at title charges, look at recording fees, look at prepaid taxes and insurance, look at escrow deposits. This is where buyers should ask, did any fee increase unexpectedly? Is there a duplicate charge? Are lender credits shown correctly? Are seller concessions shown correctly? Are the fees consistent with what I was told earlier? Seller concessions are very important. If the seller agreed to contribute money toward your closing costs, make sure that credit appears correctly on the closing disclosure. Lender credits are also important. If the lender promised a credit, it should be reflected. This is also where you compare the closing disclosure against your loan estimate. The CFPB specifically encourages buyers to use the closing disclosure to compare final terms and costs against the earlier loan estimate. If something changed, ask why. Not every change is automatically wrong. Some numbers can change because of property taxes, insurance, prepaid interest, title charges, or timing. But every change should make sense. If the explanation does not make sense, ask again. Page 3. Cash to close and summary of transactions. Page 3 summarizes the transaction. This is where you confirm the purchase price, your deposit, your loan amount, seller credits, adjustments, and final cash needed from you. One of the most important items here is your earnest money deposit. If you gave a deposit when your offer was accepted, that money should be credited back to you as part of the transaction. For example, if you gave a $10,000 deposit, you want to make sure that $10,000 is shown properly and applied toward your purchase. Do not assume it is correct. Verify it. Page 3 also helps explain how the final cash to close was calculated. So if page 1 says you need to bring a certain amount of money, page 3 helps show why. This is where the buyer, lender, real estate agent, attorney, and title company should all be on the same page. The closing disclosure is not just another form. It is your final chance to review the numbers before signing the mortgage documents. The lender must provide the closing disclosure at least 3 business days before closing. That 3-day period gives you time to ask questions and resolve problems before you get to the closing table. And in some cases, if major loan terms change, a new 3-day waiting period may be required. For example, this can happen if the APR becomes inaccurate, the loan product changes, or a prepayment penalty is added. So when you receive your CD, do not ignore it. Open it, read it, compare it, ask questions. What happens at the actual closing? At the closing, you will sign the final loan documents and transfer documents. Depending on your state and transaction, you may meet with an attorney, title company, settlement agent, notary, lender representative, or real estate professionals. You will usually sign documents such as the mortgage or deed of trust, promissory note, final settlement statement, tax documents, affidavits, and other disclosures. You will also provide your final funds, either through a verified wire transfer or cashier's check. After signing, the lender funds the loan, the deed is recorded, and once everything is complete, you receive the keys. That is the moment everyone waits for. But remember, the closing table is not the place to discover a major mistake. The review should happen before closing. Final advice to first-time buyers. First-time buyers, here is the most important advice. Do not be afraid to ask questions. You are not bothering your lender. You are not bothering your real estate agent. You are not bothering your attorney or title company. This is your home. This is your loan. This is your money. This is your responsibility. Before closing, review these items carefully. Your cash to close, your interest rate, your loan amount, your loan type, your monthly payment, your taxes and insurance, your lender credits, your seller concessions, your earnest money deposit, your line item fees, your name and property address. If something does not match your expectations, stop and ask. The goal is not just to close. The goal is to close with confidence. Buying your first home is a major step towards stability, ownership, and building wealth. But real estate rewards the prepared buyer, not the rushed buyer. So when you receive your closing disclosure, take your time. Compare it to your loan estimate. Review every page. Ask questions. Protect yourself. Because the day you close on your home should not be filled with confusion. It should be filled with clarity, confidence, gratitude, and the joy of knowing, this is my home. Thank you for watching. If you are a first-time home buyer, keep learning, keep asking questions, and never sign anything you do not understand. Your keys are important, but understanding what you signed to get those keys is even more important.